This is Elton Kane for Finextra at Cybos, and I'm here with Isabel Schmidt of Deutsche Bank, talking about real-time payments. Real-time payments is a big hot topic at Cybos this week. Why do you think that is, and what are you hearing this week so far?
So I think why that is in the meantime, we talked about it several years already, but in the meantime it's actually quite obvious, right? There's on one hand the obvious expectations on the consumer that everything is real time. That's the experience that we've all come to expect from things that happen over the internet, right? So that's an obvious one. But I think two other things also that are driving this is number one, things that are happening in the e-commerce space and the variety of options that users and consumers are expecting. So there's an opportunity there, there's a market and a demand, right? And I think the third point would be, as the economy moves away from cash, that cash needs to be replaced by something. And cash is instantaneous, so whatever replaces that somehow needs to have the same experience and capability as well, right? And I think across all of that, what we're facing at the moment is, a massive amount of potential new entrants that are affecting or coming into a space that the banks have traditionally covered, and that makes banks think about what should they do in this particular area.
Okay. So there's the impact on the banks, there's the opportunities for new entrants, but it also has a major impact on the market infrastructure layer. Can you tell me a bit more about your view on that?
Yeah, so I think what concerns us in that space, market infrastructure have been very involved, and there's an active dialogue with the different market participants. But what concerns us in that particular space is fragmentation, or the risk of fragmentation, really. So it is really key to us as a bank to make sure that the market infrastructures that support us in the different markets that we cover have a cohesive approach. And that covers a number of things. Clearly, standards is one thing, and it's a hotly debated topic at Cybos this year as well. But it also covers schemes and the rule books that support these schemes. And what we're seeing at the moment is a lot of different initiatives, in particular in the European market space, that are happening at the same time. And it's key to ensure an effective and efficient transition to instant payment for the industry to achieve some cohesion in this entire space. So fragmentation is a big risk. We really look for the market infrastructures to work together to avoid that.
You mentioned the fragmentation risk. Are there any other risks that banks need to bear in mind as everything moves to real-time payments?
Yeah, I think the other aspects that are important as the real-time business grows and develops. Right now, it's primarily a domestic discussions, right? But you hear already voices in the market that are asking, well, how are we going to do this in the cross-border space? Our economy, the world, is a global world, right? Even though a lot of payments are being done domestic, there is also a massive amount of volume that's being processed across borders. And that really, creates a whole set of different challenges. The obvious ones are around money laundering controls, know your customer, etc. How do we integrate that aspect into something that really has to be real time? And I've heard voices in some sessions this week that say, the technology is there, we can do these things real time. Yeah, technology is there, but there still is always things that have to be looked at and reviewed manually, and how do you do that in real time? So that's a huge challenge. The second challenge that I would see is, again, as the business grows and as we move use cases from maybe the P2P space into maybe a C2C or a B2B at some point, volumes are going to increase dramatically and values may be increasing as well. And that creates challenges that I don't think as an industry we have really focused on yet at the moment, in terms of credit risks and in terms of liquidity risks and market stability as a whole. So I think these are serious considerations that we have not really engaged in at the moment. Is this dramatic at the moment? Maybe not, but as we think about the progression where this goes, there are clearly very important issues that we need to think about. And in that same vein also, just scalability, right? So if these markets grow, do we have the right infrastructures that can support this in a stable and safe and sustainable manner? So a lot of challenges still ahead, but interesting ones.